Yay! I'm always happy when there's actual space on my in my cloud for Zoom. Okay, welcome everyone to our Wednesday morning masterclass. We are so excited because we have an awesome speaker trainer today. One of our beautiful trailblazers, the amazing Angie Ross. Angie, how long have you been a trailblazer with us now? It's been like what?
I don't
6 months?
know. Yeah, I think
Maybe.
I'm coming up to 6 full months, I think.
Okay, amazing. Well, we are so lucky to have you because the information that you share in this community is just gold. If you did not catch the podcast that Angie was on with Happy Healthy Women, definitely check that out. But she is going to give you so much good info today. Angie is a money coach and she helps us, all of us, get, make our way to financial freedom, find financial freedom without budgeting. And so that's the magic language right there that I love to hear. And so I'm going to just hand it over to Angie because we are talking financial freedom today. And I will mute myself and let you take it away, my friend.
Awesome. Thanks for joining me, everybody. I'm just going to share my screen quickly here. Oh, wrong one. Are you guys seeing a presentation that says about me on it? Awesome. Thank you. Okay, I have two screens going and I am a money coach, not a tech expert. Just to clarify. So Natalie did a great job of introducing me, so I'm not going to go over that. But I do want to say that one of the ways I was able to start my own business and leave teaching was through cash flow management and not your typical budget. And so I want to talk a little bit about budgets being BS. Now, sometimes people are good at budgets, about 21% of the population, but that means 79% of us fail on budgets. So I like to say, don't hate the player, hate the game. And the game or the tool of budgets is broken for many of us. So if you have struggled with budgets in the past, makes sense because 79% of us are in that boat. And so the first thing to recognize is that it's not your fault. There needs to be a better way. And so that's what we're going to talk about today. Does that mean you want to go on a free for all with your money? No, you want to have a plan and a system, but we don't want it to be restrictive, time consuming, and overwhelming, which a lot of people find with budgets. And so that's kind of the difference. So I already talked about this a little bit, but 79% of the population fail on that. And the reason for that is budgeting is actually rooted in economic theory. It is not rooted in behavioral finance. And if you know anything about money, money is not just math, right? We all get taught basic math at school, and we would all be able to really become wealthy and live financial freedom if money was just math. There's a lot of behavioral things going on in the background. That is why budgeting fails for most people, because it just addresses the numbers and really nothing else. So we're going to talk a little bit about today the anti-budget method, and I'm going to share with you a document I'm hoping that you'll be able to open on your screen. So just let me see in the chat here. Oh, I love when it does this. Does anyone else have that issue when, I should be able to get it maybe. I have this issue when I go to share. When I'm not in this meeting, it lets me share from my computer, but when I'm in this meeting, it says from Google Drive only, which.
That's Natalie's Zoom preferences.
Is it? Okay.
Yeah. It's not anything
I
you're
didn't
doing.
know I had those on. What is that? I'll fix it.
It means that, like, for a while there, I could share screenshots and other while Angie's finding it and other people's Zooms, but not mine or not yours. And I was really irritated. I should be able to share it in mine. And Zoom finally, I finally got a real person to help with that. So it's something on your preferences where you can allow people to share attachments and stuff from their computer.
Okay, got it. Okay, I'll look into that. Angie, do you need me to do that now or?
If you, I'm just seeing if I can upload it here to my, okay, I'm going to try this.
Am I frozen?
No. Am I frozen? Okay, can you guys see that? I put something in the chat. Can you let me know if you're able to open it up? Yes. And if you scroll to the third page, I'm going to show you guys through this anyways. Okay, I think it's going to work.
You have to request access.
Yeah, I was just going to say.
Oh, that's because of Google Drive. Yeah. Hold on, let me do this. Let me see if I can do the access.
If you can share it with everyone.
I shared it with Helen. I'm sharing it. Yeah, this is because normally I can just drop it from my computer and it doesn't let me do that. It doesn't force me to do this. So yeah, that's the settings, I guess, Rusty, that's what you're talking about. I got Rusty and Helen's request. If anyone else wants to hit request, I'll do that right now. But otherwise, what I can do is I can email it out to you as well later on, and you can have a fillable. It's fillable, so that's a nice thing. I'm just going to go through it with you, but you could actually put your own numbers in here. So that's why it's nice to have your own copy, because then you can put your own stuff in there and make it work. Okay, I also got Cora's. Anybody else? Oh, I got Natalie's and Ann's. Here we go. Here we go. Awesome. Sorry, this isn't normally how it works.
Okay.
We roll with the punches here in Happy Healthy Women, so we're all good.
Yeah. Well, honestly, usually I can just drop it in the chat, but that's because it's not showing that option. Anybody else? I think I got everybody. Okay, awesome. So I'm gonna go in and I'm gonna open up my copy of this workbook, and you can follow along with me. I want it to kind of be a working session, meaning like you should be asking me questions pertaining to you, or feel free to. Right. So the idea is to make it actually usable for you down the line. So the anti-budget method, this is the method that I use with my clients one-on-one. The main difference being I actually have an analyst that goes through clients' numbers for me. So we take 4 months worth of people's financials and we assess them and we analyze them and we present your numbers. However, if you don't have a very complex financial situation, you can build your own anti-budget. So I realized that I had a lot of people I could be helping by providing them with the structure, and they could take this and run with it and really help them to calm their cash flow chaos and reach their financial goals, depending on what those are. So the first thing we're going to do is talk about our financial why. Then we're going to calculate our fixed expenses, look at our non-negotiables, and then our guilt-free money, which is my favorite part for obvious reasons. So identify your financial why. When you are building a financial plan or a cash flow plan, you really have to have some financial goals. I used to be guilty of not having financial goals, which is kind of silly. And the reason is I'm like, well, when we have extra money, we'll just decide to do with it then. Guess what? We never had extra money because we didn't have anything to work towards. We didn't have anything that was motivating us. So now we have financial goals. I'll share one of my financial goals was to buy an Airbnb. And we did that. In order to do that, we had to save for a down payment. So I would have typed that in here as one of my financial goals. A lot of times financial goals may be paying off debt. It could be prepaid vacations. I love that one. Could be building up an emergency fund, maybe retiring early. It could be anything. So this is very personalized. If you can actually make it a numerical goal on a yearly basis, it's going to help you with building your plan. But even just having these goals in mind is going to motivate you to change your habits when it comes to money. Does anyone want to share a goal? That I didn't say? Yeah, Rusty.
I'll share a previous one that I did that I was so happy. I always wanted a good stereo, a really, really good stereo. And I decided, and this was when I was in debt actually too. And I thought, okay, now I'm going to put 10% into savings for me that I can do anything, 10% into savings for emergencies, and 10% into charity, and the rest is going to go into debt. And I also live in a tiny home. So good stereo and tiny home, both. And I got this awesome, and it can fill this space. And it was just, it actually happened really quickly to get there. And so I do that. And I've done that for a lot of times. When we were all together as a family, they would give me money for a goal, a group project, because they knew I wouldn't touch it. It would be there. It would be sacred. It would be for that project, no matter what else was happening. So I love what you're doing here. I think I've been doing some of that. So carry on. This is awesome.
Thank you. I also want to say that I love that you said it doesn't take that long. When you start to save money on a monthly basis towards these things, and then all of a sudden you look and you're like, whoa, where did this money come from? Like, I do that all the time. I'll open up, I have a separate app, which I will talk about that I use, but I open it up. I'm like, okay, like even the beginning of January, I had $7,000 set aside in my life jacket funds to go into 2024. I'm like, all right, here we go. Right. And so it really accumulates quickly. Okay, next, so once you've figured out your financial goals, we're going to talk about calculating your, I call them your anti-budget anchors or your fixed expenses. So these are the things that really don't have an emotional risk of overspending. They're just kind of fact. And so these are where we can just look at your numbers. I have some examples here. Housing expenses. So really, whatever you're paying for your house right now, it's kind of fact unless you're going to move, right? And so we're just going to have to cover these costs. So I have my housing expenses, I have my transportation expenses, same thing. We have our car payment, and you'll notice these little blue boxes, you can fill in your own numbers. I just have an example to the left to give you an idea. And then some other monthly anchors or fixed expenses would be insurance. Hopefully as business owners, you have some insurance because if something happens to you and you can't work, that could cause you a problem. And I don't sell insurance, just so you know, just letting you know that it's really important. And then what you want to do is total up your anti-budget anchors. So in this person's case, they have about $3,800 a month of fixed expenses that they have to cover with the money that they're bringing in. And so you're going to see how this helps us down the line once you do that. Any questions about the budget anchors before I move on? Really, if you've heard the term fixed expenses before, it's very similar. Okay. So the next step is where this is kind of the fun step, actually. I quite enjoy this because you're calculating your non-negotiables. So I'll give you an example. At my house, golf is a non-negotiable. Well, I shouldn't say at my house, in my life. My husband doesn't like golf. So for me, golf is a non-negotiable. I spend about $500 a month in the summer on golf. Whatever, it's a non-negotiable. I'm not happy if I don't. So it's what I do. So I would actually put this in as sports or fitness, sports, and health. And so you want to notice a couple of things. It's a monthly number. And the reason we do a monthly number, even though I'm clearly not golfing right now in -15, I still want to save for that golf now. So it's a lower reduced number. So for example, if I'm spending $3,000 a year on golf, okay, that equates to $250 a month. So I actually want to save that monthly. So when summer comes around and I'm spending $500 a month, I'm not screwed, for lack of a better phrase. I have the money already saved. Some other ones that come up, notice vacations. Okay? I call them non-negotiable at my house. We've identified them as something that we want to have. So we have a yearly vacation to the tune of about $5,000. So we save $400 a month towards that. Our ESPs, our RRSPs, TFSAs, same idea. Okay? Pets, people forget about their pets. It is one of the biggest spending categories that I see. When we're doing an analysis on people, they forget, they'll spend, I'm going to blow your mind right now, but I had one couple spending $1,700 a month on their pets. 1700. Now, they're a lovely couple. They had actually taken in some stray cats, and so they were feeding like a lot of cats, but $1,700 a month. Like, I need a part-time job for that, maybe a full-time job for that. Okay. So again, it's very important to take a look. We have emergency savings, Christmas and birthdays, and debt repayment. Right? So the non-negotiable part of your debt repayment would be your minimum monthly payments. You have to make those payments. So that's what you would put in there. So the idea of your non-negotiables is these are things that you are kind of choosing, right, to participate in because you value them. You value vacation, you value saving for retirement, etc. But of course, we want to talk about them on a monthly basis because what often happens with cash flow issues is when Christmas comes up, you spend a lump sum of money, and now December is super, super expensive. And how do we cover that? Typically, credit cards. Credit cards, lines of credit. At my house, I put $200 aside for Christmas every month. I actually increased it to $250 for this year because I was short by a couple $100. Yes, I'm human. So I increased it to $250. And guess what? When Christmas comes, I open up my Christmas account and there's my money sitting there ready for me to pay for Christmas. And so we're getting ahead of that issue. Okay, any questions about non-negotiables? These are going to be totally different for everybody because it depends on your priorities. So if you don't have kids, you're not going to need to worry about kids registrations, right? If you are really into vacations, you might need to bump up your vacation from 400 to whatever number you want. If let's say you're going on $12,000 a year of vacations, you'd put 1,000 in here per month. So again, it's going to vary a lot based on you and your wants with your money. So we have our non-negotiables. So the last step, and this is what makes us different than budgets. Once we've identified those, we don't have to really track them. Okay, we don't have to track them. We know our numbers. We're not having to like really take a hard look at that, but this is where we're going to do a little bit of work. So we're going to now look at calculating our weekly spendable. So essentially in this example, this person was making $8,550 a month take home, okay, after tax. We talked about their fixed expenses being $3,800. Okay, so we have to cover those. Their non-negotiable monthly expenses were $2,050. Okay? So when I take their income, I subtract their fixed expenses and I subtract their non-negotiables, we have $2,700 left to play with. Okay? Notice, we haven't covered food, we haven't covered retail, we haven't covered entertainment. Those are kind of the three unconscious spending categories that people waste a lot of money in. Okay? So that's where we're going to take this $2,700. We're going to divide it by 4. And what that does is it gives us our weekly spendable. I like to call it the sweet spot. Because if we can stick to $675 a week for food, retail, and entertainment, all of our other financial goals have been met. We have covered all of our non-negotiables. We have covered all of our fixed expenses. And now we don't need to track anything. All we need to track is that $675 a week. Okay, and so it really reduces the need to be tracking, oh, I went to Starbucks and I spent $10 on the drink. Guess what? I love Starbucks. Great. Take the $10 out of your $675, move on with your day. Now you have $665 to spend, right? So what ends up happening is you are really just tracking that one number instead of the litany of numbers that come at us with a budget. It really simplifies the process. Now, depending on the number of people in your family, like at my house, our spendable is a bit more than that because we have 2 incomes. So it's all based on the formula here of taking your monthly income minus your fixed expenses minus your non-negotiable expenses. And my husband loves skiing, so our non-negotiable is quite high because skiing is not cheap, right? And so that's what ends up happening. You end up taking care of those and just worrying about that one number. So just to explain that weekly sweet spot or spendable, you can spend this without tracking as long as you stay within the overall guideline of the number you have calculated. My favorite thing is to use cash for this. You don't have to use cash for everything else, but I would use cash for your spendable. And the reason for that is just by using cash, you reduce your spending by 25%. They have done studies on this over and over and over again, simply by switching to cash. So, which to me is worth it. 25% is huge. Actually, that's a huge number. Does anyone have questions about the spendable? Because it can be a little bit confusing sometimes.
I think there's a question in the chat from Helen.
Mm-hmm. Look.
So this is an example of someone and their values, right? Because
Yeah.
I'm a little bit surprised that food and health was not a non-negotiable from someone who's been on the other end where I had a health recovery and realized without it, I'm none of the other stuff is possible.
You can put it into your non-negotiable.
Okay.
Right? You can put whatever you want in your non-negotiable.
Okay.
That's totally fine. So it's very dependent on you. When I'm working with clients, I actually have an app that we put their numbers into and I talk through and we go through what are your non-negotiables that you must have. If it's so much of supplements a month or this for my whatever, that's fine. That's your choice. It's your money. That's what you want to do. Absolutely. You can put that in.
So it's editable.
Oh yes. The issue that happens a lot of times with food is people will not recognize how much they are spending and the wastage that it's creating. And so just by kind of bringing your focus to that, it helps. But if it is a non-negotiable and you must have this for your food, absolutely put it into your non-negotiables.
Okay.
Yeah, that's a great point. I actually, well, at my house, my husband's a foodie. So once again, but what was happening too is people will go to Costco and say, well, my food cost is this. And I'm like, that's not what you're buying at Costco. So let's be realistic. You're buying some food and you're also buying this and this and this. So just by bringing some awareness to it, they were able to reduce cost. But yeah, I agree with you. Everybody's non-negotiables are going to be different.
And the cash thing is very interesting because they're thinking of digitizing. I mean, we're kind of digital already with the credit cards and this and that. But if we went full on digital, I worry about based on what you just shared, what would happen to we're already like a nation that's so indebted.
Mm-hmm. It's
Right.
going to be a problem. It's already a problem. Like I have a teenage daughter and she wants Apple Pay on her phone. And I'm like, oh, hells no. Because you don't feel that purchase. When you wave your
Right.
card around, you really don't feel it, right?
Yeah,
And
yeah.
I agree with you. I will be very shocked. They will not be able to do it. They won't be able to do it. I love what they won't be able to switch it to cash. They're going to have a huge revolt or if they get rid of cash.
Well, I certainly hope so for more than that reason. Like it's
Yes.
just, yeah, yeah, yeah.
And I love what you said there. I opened a separate account for your cash spending. Yes, there is a card, and I believe I mentioned this down here. I'm not sure if I do. There's a card called the Koho card, KOHO, and basically what it is it's a preloadable Visa card, but it's not Visa because Visa charges you fees. So it's a preloadable debit card, and you can transfer from your regular account your $6.75 a week over to that card and you'll get to see the balance go down, and essentially it's just tracking that number for you instead of using physical cash. So Anne, thanks for bringing that up because that's a good point. I will also say though, you won't see necessarily the 25% reduction just from physically handing the cash, but if you're sticking to your number, then you're good.
Yeah. Right.
So again, my tips usually for clients are try using cash at least for 30 days. See if you can do it. It'll just bring you that consciousness level. Focus on the weekly spendable and sticking to that number. If you just focus on that one number, if you have calculated it properly, you will notice a massive improvement to your finances, your bank account. And the other thing that we need to talk about is you want to actually set aside money for those non-negotiables. So in my example up here, we talked about the fact that Christmas, $200 a month. Where are we putting that? I actually put it in a separate account. So I have an account called Christmas and it goes in there. There's a great app called Neo, N-E-O. They let you name 10 different bank accounts with names. And so you're also earning 4% interest through Neo. So Wealthsimple, I used to talk about all the time as well. They're very good, but the problem with Wealthsimple is you can't necessarily name 10 different ones. And so for me, I really like Neo. I have one for my business taxes that I save it in, make 4% on them. I have it for my vacations. I have it for my Christmas. I have it for anything that's in my non-negotiable list that I actually not paying for on a monthly basis, but I'm saving for on a monthly basis. I make a separate account and I call them life jacket accounts because you may have heard the term sinking fund before, but sinking fund to me sounds very negative. It sounds like I'm drowning, and actually life jacket funds are saving us from drowning financially. So I just like to flip it around and be a little more positive. Any questions? Because that's really it.
Sorry, what was that bank account thing called where you can have 10 Neo, N-E-O?
Yes, Neo, and then there's the Koho card, which is the card you could use if you didn't want to have a separate cash account, like full separate bank account, but you just wanted to preload money onto that card and use it like a debit or a Visa card.
Okay, cool. Yeah, TD has like free savings accounts, but they don't give you 4%.
Did you say TD?
Yeah.
Okay.
Yeah, I left TD too.
You know what, you need to use one of the big five for or your regular banking typically, but for any kind of savings accounts, they are not offering you high yield. So
no, they don't offer you 4%.
TD was like 0.05% relative to 4%. You're talking about an 80 times differential. It's 80 times less interest. I can't.
So it would be interesting to put the grocery money on that card so it earns more money.
So Neo is where you put your accounts. Koho card does earn you some money. I'm not sure what the percentage is. So Neo is what I'm talking about, 4% high yield savings account where I would
to leave it in there.
For vacation.
Okay, for the other stuff, the bigger things, the yearly things, okay.
Yeah, so Neo for me would be for my life jacket funds, and the Koho card would be for my weekly spendable if I don't want to use cash. I actually do believe that Koho does give you a percentage, but I don't know the number, and it won't be 4. But Neo is 4.
And you prefer that over, say, a money market fund or a cashable GIC because the rates are better?
It's accessibility. So the rate's 4%, which is great right now, and you can take it out in 5 minutes.
Right.
If you are paying, like, for example, I actually have a house and car repair fund as well. If something happens to my car, I have money set aside already. It's making me 4%. But if something
Right.
happens to my car today, I'm knocking on wood, just so you know. If something happens to my car today, I can get the money out immediately and pay for the repair.
Right.
Yeah,
That's
so
a
that's why
really valuable little tip there.
I try. I
Very
really
cool.
So
do.
what I really love about the non-negotiables, and this is the whole reason why it's so different from the budget method, is because this is actually, like, when I think of the non-negotiables, that's the life that's the life I want to live, right? Like all of the things that I want to have, right? The travel, the boutique fitness, all these things, right? So I think that that's really brilliant in, when we talk about designing our life, when we talk about vision, like this is such a beautiful complement to it in terms of the numbers, right? And this is something that I think a lot of women in business look past, right? So thank you for this, and thank you for giving us a practical way to look at those dreams, because it's all possible, right? As you share.
I love what you just said, because what you're doing is you're prioritizing those things that you actually care about. And then whatever's left over, you can put towards retail or whatever it is. Because no one really, I shouldn't say it values retail, but realistically, a lot of times we're like, oh, we wasted money there or whatever, right? So you're forcing yourself to deal with your non-negotiables first. Like, this is a must. And then we can do whatever we want with the leftover and not impact those things that we really want. So that's great. And the other thing that you said, which is really great, is business women, for me, what this does for us as well is it outlines exactly how much we need to kind of make to cover those things that we care about. Because a lot of times people will say, sorry, I hate to say this, but a lot of times business women will be like, I'm not going to look at my personal finances. That's not important. I'm just dealing with my business. Looking at your personal finances is actually the first step, because you can see, hey, I need to cover these expenses to live the life that I want. And that translates to making this much revenue. So it helps you to actually plan out your business revenue as well, which for me is important, because of course I want to make millions of dollars, like bring me all the revenue. But hey, what's my base level to kind of have the life that I want, and also kind of look at how much time I need to work to get to that.
Awesome. I love that.
This is so generous, Angie, just generous. And I can see myself having fun with your fillable PDF to add to what I've already done. And I think maybe part of it was growing up, selling eggs and cream on the farm, is that we had, there's jokes about the wife's egg money type thing, right? But I put myself through Grant McEwen on egg money, cream money, selling goat milk, and babysitting, and I'd had no debts when I got through college when I first got off the farm. So I've always kept envelopes and things and cash around. And when I travel with somebody else, we both put an equal amount of cash in the envelope. And when that cash is gone, then we put another equal amount in. So we don't have to figure things out later, type thing, on the expenses. This is very similar, and it's similar to what I've done, but some of the ways that you've laid it out are new, and I just want to go and play with the numbers now.
Yeah, do it. Let me know how it goes.
Yeah, I will. And I wanted to say that my mother used to say, and that people don't realize, and she didn't use the terms you have of negotiables, non-negotiables, but she would always say that food is the only area that you can consciously save. You have to put gas in the car, you have to dress for work, you have to have this. And so yeah, this is really cool. Thank you so much.
No problem. Do you want me to put the workbook back in the chat again, Natalie? I saw that.
By the way, I was multitasking because I'm behind on work, and I like to eat well. So here's my Brussels sprouts for my day.
Love it.
Yeah.
Okay.
And my husband and I
for Deb, she came late. Sorry to put the work back in there just for Deb because she was here late. Sorry.
Cora?
Yeah, we do that similar sort of way of doing our budgeting thing too. So what I like to do is try and keep that weekly amount low, so that at the end of the week, if there's extra, then I do the fun stuff. You know what I mean? I'll have my Amazon list. It's like, what can I get this week if we don't spend that much? But sometimes, my husband spends more. So it's like, and there's two of us in the same amount. It doesn't always work, but it's always fun when there's extra. It's like, yeah, let's buy this. And I don't feel guilty about it, because then there's the next week's one.
I love it. I like to actually limit my husband's spending so that I can have more fun money. But anyways, that's
Try
maybe
to.
a relationship
Try
workshop.
to.
Yeah.
I also feel like this is rooted in an abundance mindset versus a scarcity mindset, right? Like, really, it is. It's like, okay, what do I want? Let's put that first and then make that happen, right? And so, yeah, I love this. I'll stop now.
There's way less worrying. I know years ago, we used to just throw all the money in one account and hope that the money was there when it was, but it never really worked out. And now you don't have to think about it because all the maid stuff that you know about is getting paid, and then you kind of have the weekly, it's more like a fun account and you don't have to think about all the other stuff. Way better.
Exactly. I want to say, Natalie, too, that what I like about it from a business perspective too is I'll play with the numbers, like the income numbers, and see how much extra spendable that gets me based on the extra hours I'm working to get those clients, etc. So I'm like, oh, I can play this many more rounds of golf if I get another client. So I'm like, let's go. Like it kind of is motivating that way as well.
So Angie, can you share how this relates to like how you work with people? Because I mean, would this be something that they sort of just download and do on their own and then go? Or yeah, so talk to us about that.
Yeah, when I'm working one-on-one with clients, we do the numbers analysis because a lot of times people don't even want to fill in their numbers in the workbook. They may not know their numbers. Oftentimes the numbers that they fill in are estimated incorrectly. I don't know how to say that more nicely than that. They're wrong. And so then they're building a plan off incorrect numbers, which really, what's the point of building the plan? And so that's where we bring in our analyst, and we give them their anti-budget, and it's a lot more detailed with a lot more categories. But for the purposes of this, I really trimmed it up a little bit. And then what I do is walk them through the spendable. I help them with that number. We adjust if necessary. We also do some more things with the life jacket funds. And then a lot of times there's debt eradication things we're working through as well. So we do a full 6-month coaching program with them because, as I said before, a lot of this is behavior. So even if you know your numbers and you get your numbers done, you may not behave in a way that you're sticking to those numbers and seeing the results. So we help them stick to that. And honestly, my last clients just paid off $40,000 worth of debt in 7 months. They're a middle income family. So they rocked it. They were awesome. That's not always the case. It depends on your scenario, right? But they had the ability to do that. And so at my house, like I said before, I didn't pay off a lot of debt because I don't have debt per se, except for some mortgages, but we were able to buy an Airbnb in Mont Tremblant and get me out of teaching just by following a cash flow system. That's a lot easier than budgeting. It never worked for us before. So yeah, I'm also doing a group program with some ladies that I'm starting in February, and that's more of a community of women that are going to work through the steps together, but they still get an analysis of their individual numbers. And so that's something I've been building for the last little while, and I'm really excited because I finally got my act in gear and got it going. And so it's starting at the beginning of February. So, oh, I saw Helen's question. Emotional aspects. The Psychology of Money is a great book. I'll type that in there. There's also one called The Soul of Money. That's Lynn Twist. I don't remember who wrote Psychology of Money. Actually, I do. Anyone else? Questions? Or I'm just so thorough that nobody has questions.
Hi, Angie.
Oh, hi.
So first of all, I just wanted to say this was awesome. And I listened to the podcast you guys did, and I thought it was great. And, you know, for me, I thought about it and I was like, I'm so intentional with so many areas of my life, but not necessarily with the money. Like I have a basic budget with my, you know, like tracking of my expenses and things. But a lot of times I fall out of that. You know, whatever I was planning to save will be less because I'll spend on other things. So I love this idea. I wanted to ask you, would you recommend, like one of the things I was thinking about after listening to your podcast and even today is like going through my spending for the last couple of months and putting it into buckets and seeing where I actually am spending my money. And then that helping me build maybe my non-negotiables in a more realistic way.
100%. That is what my analyst and I do. That's what we do. But yes, if you could do it on your own, absolutely. That is going to inform you, because I think a lot of the problems stem from people thinking they're spending a certain amount in certain areas. And the reality of that is it's not necessarily true. So, and I'm not judging, because my Christmas budget, I spent $200 extra. So I have to adjust for next Christmas, right? So a 100% great place to start. And then, yeah, build your non-negotiables from there. If you like where you're putting your money, keep going with that, but at least you have the numbers, right? Great idea.
Okay, thank you. This was really helpful.
I'm writing down the book choice, The Art of Money, excuse me. Nobody else? I'm an open book. Yeah, ask me, no, ask me anything money related.
I don't want to ask, I just want to say that it's so true. I do feel like if you're not holding the cash in your hands, it's so easy to go into a store and go, oh yeah, and I can put that on my card. I can put that on my card, you know, it's really easy to do that.
All the time.
Yeah.
I actually love cash. I use cash at the golf course all the time. Like, so I roll in with my $100 bill and wave it around, and they're like, oh, the cash lady's here again. I'm like, that's right. Let's go. It's kind of funny. Maybe make a joke of it now. They're like, where did you get your cash? I'm like, it's legal. My cash is legal. Don't worry. There's no illegal activities happening for this cash, but it is pretty funny.
I just want to have a comment. So this was great. Thank you for letting me in late. And I listened to you, I think maybe it was a couple of months ago as well. And so it's really, yeah, it's been really, really helpful in making me think. And there's a parallel there definitely with the work that I do, like what Natalie was talking about, but not even just so much visioning, but also, is it the kinesthetics? Is that the right word? Like with money in hand, like the paper. And I have the same thing. Like there's a real big push right now with AI and just with Canva, Pinterest. People want to do vision boards like they're the easier way, but they're missing out on the secret, which is the feeling. So when you said feeling that you don't feel that you've spent money, that's exactly it. And they're not feeling the vision. They're missing out on that. So I think there's definitely just made me think more when you were describing them, like, haha, that's truly it, is that it needs to be something that we feel within our body, which then impacts our subconscious, which then supports, creating a new paradigm that I am a woman who is wealthy, but who spends wisely. And, in my case, I'm a woman who's a visionary who deserves and lives this beautiful life. So I just think there's something really, I don't know, I never thought about before, but connected there around the feeling.
Yeah, there's a synergy. I know what you're saying. And it's funny that you bring up the vision board, because I did one on Canva before, and it didn't have the same impact as actually doing it physically, like with a board. So that's interesting. I didn't even think about that, but I remember doing it and I kind of rushed it, and it didn't feel the same at all as doing a regular one.
Well, anything that's worth doing, it's going to be hard. It doesn't need to be, it can be simple, like things are simple, but it's still going to be in terms of, it's just like doing a budget. Like you can just it's hard. Like you've got to put effort into it, or otherwise everybody would be doing it. That's what I also say too. Like, and so people will say, oh, it's a lot easier just to do a vision board on Pinterest, or it's a lot easier to just do one on, well, it's actually the process. So I think the same thing with the work that you're doing. It's like doing that makes you self-aware. And so thank you for sharing all this. It's been really helpful. I love the tip. I'm going to check into the Neo.
It's a new one that just came on my radar probably in the last couple of months, because I was using Wealth Simple, which I do like, but I don't think it's organized as nicely, and you can't have those necessarily 10 buckets. And I was like, oh, that's really important for me, and still making 4% on each of those, because in Wealth Simple you can make 4%, but it's just on the cash account, and you can only have one cash account. So I'm like, what? I want to make 4% on my vacation. I want to make 4% on my Christmas fund. I want to make 4% on all of it. So Neo was a good option.
How do you transfer money from, can you transfer money from your bank account to Neo?
Yep, you can link up your primary checking account straight to it and transfer it over. It's super easy.
And can I ask you, do you have any recommendations for preparing a will and that type of thing? Or referrals?
I currently
Natalie,
don't.
do you have people in Happy Healthy Women who do that as well?
We have a business lawyer, Helen, who will know other lawyers. If you want to reach out to her, her name is Miriam. She's one of our trailblazers. So she works on business stuff like trademarks and corporations and things like that, but she can refer you to someone who does wills for sure.
Okay, great. I'll loop back with you to get that information.
Yeah.
Thank you.
Angie, I was just going to ask, so you briefly mentioned like using the big bank for, like, obviously my mortgage is with them, right? Like,
Yeah.
so things like TFSA, RSPs, things like that. Yes or no? Oh my gosh. Okay, tell me.
Okay, TFSA, it depends, because TFSA, and this is a widely misunderstood tool, but a TFSA is not a savings account, it's an investment account. So it protects your investment from tax. So a lot of times people will put a money in a TFSA and they think, oh, it's just a savings account and it's sitting there earning me money. If you haven't chosen to invest that money in something, you're probably not earning very much on it. They shouldn't have named it that. Basically, I'll leave it at that because it's a terrible name for the tool. So if you have your TFSA with your bank and under your TFSA, you're investing in like an index fund or GIC under your TFSA, you're probably fine. However, if you're investing in a high interest savings account under your TFSA, well, we already discussed that TD doesn't have great rates for the high interest savings account. So you're saving tax on interest that you're not really making because the rates, it's a waste of your time to do that. So the Neo, I know Wealthsimple for sure. I actually don't know if Neo does, but I'm guessing they do. Wealthsimple for sure, you can have a high interest savings account within your TFSA. So you want to think of your TFSA very similar to an RRSP. They're very similar in that they're not actually an investment. They are an investment, I like to call them umbrella. Okay, vehicle is what they say. And basically they protect your investments from taxes essentially, and they give you benefits of tax benefits. But underneath those two umbrellas, you have to choose your investments under there. And if you haven't saved with the bank and they haven't talked to you about this is why I don't love banks, because they don't give you unbiased financial advice. They benefit from the advice they give. We need to use them. So when I say we need to use them, my personal opinion is I use it for checking accounts. I use them for my mortgages. And then if I'm doing investments, I do them myself. Or I find a fee for service financial advisor, which actually I'm training to be, but that's a whole nother topic for another day.
Okay, cool. So those main things like checking, mortgage, and then look towards Neo for these other things and Wealthsimple.
Neo or Wealthsimple, yeah, they're both good.
Okay, cool. Thank you. Are there any other questions or comments for Angie while we have her? No? I think
gratitude.
we're good. Yeah, gratitude. This is so great. Thank you for giving us an abundant way of thinking about our money. I love it. And thank you so much for that workbook. It's awesome. So yeah, does everyone have it? We should all just put our Instagrams in the chat maybe, so that, because Angie is very active there, so you could reach out to her on Instagram or wherever else. But thank you, Angie, for this. This is so great.
Of course. I love sharing money information. You know me.
I know. You're so good. And you walk the talk. Like, you actually are completely living the life that you say you are. And I absolutely love it. So awesome.
Thank you.
All right, everybody. Well, Thank you so much for this awesome masterclass. Thank you, Angie. And we will see you all next week. Next week, we have our mastermind session, 7 p.m. on January the 24th. So we will see you then. And then we have our Prosper event on the 28th. Please grab your ticket and come if you can. Rusty, I will miss you. But if you're down to fly here, it's a little bit warmer than it is in Calgary.
It is, but I've got some big plans for trips and stuff. So I'm stuck here getting everything lined up for going
I got it.
walk the El Camino. So
Oh, nice, beautiful. All right, everybody, have a wonderful rest of your week, and thank you, Angie. Take care.
Thank you. Bye.
Bye.